Hi everyone! Today we're going to look at how the CTKS method works on Forex. If you're new, a very warm welcome and welcome back CTKS family. I'm Ken from Crypto Trading KS and the inventor of the CTKS method, the world's most powerful smart money buy and sell level detection system. If you would like to know more, please subscribe and give the video a thumbs up. Currently, foundation memberships to the CTKS Method service are on offer at ctksmethod.org. You can also reach out to a CTKS ambassador to get a huge discount off the CTKS Masterclass. Links are in the description. Let's run the numbers. When looking at Forex, it's very important to know where the DXY is going. Also, the Euro USD and USD JPY are very important to understand. The DXY is a Tier 1 chart. Tier 1 charts move global financial markets, and the DXY is definitely an engine. With the CTKS method, we mark up objective dynamic market structure from the inception of price history. The output is this indicator, which is available from inside the CTKS method service. Objective dynamic market structure is continuously changing, and this is one of the things that throws a lot of people out. When we look at the DXY sold down really hard, but it sold down two safety nets. The greater confluence of safety nets, the higher the probability of a reversal. Inside the CTKS method service, just go to area 4 and you'll have a video which deals with the DXY, the forward projection on the month, the up and down levels through three-dimensional risk management. When we get a reversal above an SL, which is a Stanfield level, and that was at 102.209, we can see the price is heading towards the next SL up above, around that 102.595 mark. This is very important to understand. We said yesterday that the DXY had found a basing pattern. We expected the DXY to come up, and in Forex terms, all of these actions, these price movements, are absolutely staggering in terms of the number of pips that are crossed over. The DXY is currently 102.491. Let's have a look at some potential parts for the US dollar. What we can see around our current trading price, 102.490, it's just below this smart money sell level at 102.593. We're getting a lot of positive momentum through price at the moment. Notice how when positive momentum tries to get up to a smart money sell level, the sellers are pushing it down. That often causes price to retrace before it can gain momentum and seek to get above. What we may see is another push down before challenging this 102.596. If we get above that, the next smart money sell level, and we're starting to see a bit of a confluence of those, is at 102.732. We're likely, if we get above this particular 102.596, potentially to go about halfway, because that's a lot of sell pressure above there. It's going to be hard for price to get above. We may find some consolidation and then attacking the higher levels. Always have your three-dimensional risk management playing out at all times. Understand the price can go up, it can go flat, or it can go down. And if you're going long at spot or long under leverage, especially in the Forex market, you need to counter for your three-dimensional risk management. We know that all markets are intercorrelated and interdependent when looking at the euro dollar. We know that there's an inversion between the euro dollar and the DXY. If the DXY continues to come up, we would expect the euro dollar to go down. If we suddenly see the euro-dollar pair start to come up, we would expect negative price momentum on the DXY. You must look at more than the chart that you're trading. The big question, therefore, is where is the smart money buying and selling? Popping on the indicator, the first thing that we notice, there's very strong support for the euro around that 108.927 mark. This is really important to understand. The euro is just currently under a smart money sell resistance level at 109.250. It's currently 109.227. It's challenging this smart money resistance but not getting through it. What does that mean? We've got all of this gravitational pull, smart money pull, and these particular SLs or Stanfield levels, when they aggregate together, they become more and more magnetized. If we can see that happening, we're going to get confluence between the euro and the DXY. If the euro comes down, we would expect the DXY to go up. To get the analysis of the euro dollar, just go into 18 and you'll see it there. You'll also get the three-dimensional risk management for the rest of the month as well. You can see that when we look at dollar yen, USD JPY, we can see a completely different objective dynamic market structure. Why is this? Because dollar yen is getting overridden by SLs or Stanfield levels. How do we know that? Well, we just pop on the indicator and it's as clear as day. We can see dollar yen is currently 141.89 and this 141.95 is a very solid smart money resistance level. There is a direct correlation between dollar yen and the DXY, an inverted correlation between dollar yen and euro. So what do we actually anticipate? If the DXY starts to come up, we would expect this 141.95 to be broken and this confluence to push dollar yen upwards. If the euro rallies, we would expect dollar yen to come back to its smart money support level around that 141.76 mark. Please let me know in the comments how many people are in the Forex market and actively trading it. One thing to remember, dollar yen and all of these charts are marked up since the inception of price history, dollar yen from 1971, and a very great shout out to CJ. CJ said, "Great video, Ken and Kate. Your system has revolutionized the way I trade Forex. The consistency of evaluating high percentage and probabilistic moves is amazing. After being educated in the masterclass, which allowed a great understanding of how all the world's markets function together, adding the CTKS method, which allows me to mark up any chart, then adding the method service, it has cut years and I'm sure tens of thousands of dollars of losses off my learning curve. Your education system and method is the greatest purchase I've ever made." Thank you so much, CJ. That's very kind of you. I'm only showing the immediate levels up and levels down on the US yen or the dollar yen combination. You can go and see the video at video number 25. To apply for the indicators, please go to 00 Area 4, accessing the indicators. There's a form to fill out there. Once you've filled that form out, you will be avalanched by 25 plus indicators. Provided you're a current member to the service, those indicators, which are invite only, will operate. Unfortunately, many people don't understand that all markets are intercorrelated and interdependent. This also means that all charts are intercorrelated and interdependent as well. Unfortunately, some people in Forex don't look at the main markets. Currently, there's a directional inverted relationship between the DXY and the S&P 500. If this is the case and that relationship keeps on playing out, we would expect if the S&P 500 goes up, the DXY will come down. But how do we know what the S&P 500 is doing? Where is smart money? Where are the algorithms, the institutions selling and buying? We can answer that question by just popping on the indicator. And what do we notice here? a lot of overhead sell resistance in the S&P 500 from 44.35 upwards. We also note that the S&P 500 is literally just at a smart money buy level at 44.10. It's a little bit below it, but that doesn't mean the gravity is not kicking in. Inside the service, if you go to 01, you will see the S&P 500, the monthly analysis right there. A lot of people, when they trade and invest in commodities such as gold and silver and others, they sometimes don't look at the DXY and other Forex pairs. That's a really big mistake. Gold currently has a negative inversion to the DXY. You'll learn about deep dives in the CTKS Masterclass. But as we saw in the Japanese yen, what you see is objective dynamic market structure supersedes relationships. Therefore, the question is, gold is currently 1951 and 55. Where is smart money buying and selling? We can see that we drop below this 1954 level. This is giving us an indication that the DXY is strengthening. By just looking at gold, please let me know as a part of your active learning. And active learning gets you synchronized in with the market. By looking at gold, make an estimate of what's happening with the Japanese yen and the euro. Inside the CTKS Method service, just go to 06 in order to see gold's markup and analysis for the coming month. This is just a very quick introduction to how all charts are intercorrelated and interdependent. The idea of actually using gold to predict the Japanese yen and how it's moving, or the euro dollar, how it's moving, is very novel to a lot of people. But this is the way the professionals look at the market. They examine as many charts as they possibly can, especially the Tier 1 charts. The Tier 1 charts are the engine of global financial markets.